I'm here on the sidelines of the Kansas City Federal Reserve's annual economic symposium with the IMF Chief Economist Pierre-Olivier Gourinchas. It is great to see you. Thanks so much for joining me.
Thank you for having me.
I want to get your reaction to ECB President Christine Lagarde's speech, which she just gave here at the conference. She says we may be entering a new age of shifts in economic relationships, and that could create challenges for central bank policymakers. Your thoughts on that? She also talked about shifts in terms of investment in green energy, the labor market trends, and countries that are turning inwards, perhaps creating changes in global trade patterns that could lead to inflation shocks.
Well, that's certainly one of the risks that we highlight in our reports, that we see countries sort of moving away from each other. We see increasing geoeconomic fragmentation. This is going to be bad for growth. This is going to be bad for global trade. And this could also, by increasing marginal cost for businesses, it could also weigh on inflation dynamics and prevent a speedy return of inflation to central bank targets. So it's certainly the right concern to have. Now, President Lagarde was mentioning geoeconomic fragmentation, but that was not the only source of uncertainty in this new world. Climate transition, the fact that we have a war on the doorstep of Europe, the fact that we're still dealing with the aftermath of the COVID pandemic and all of the shutting down the economy and reopening. These are unprecedented. And in a sense, we need to upgrade our operating system a little bit here to understand exactly what's going on and make sure we're ready for the future.
Are we on a course for an acceleration of deglobalization?
There's certainly some signs that deglobalization could be increasing. We've plateaued in terms of globalization. We're not increasing our economic ties any further at this point, and we see the signs that some countries are putting some trade restrictions, some restrictions on technology transfers, etc. And that is certainly going to weigh down on integration going forward.
Coming back to the economic picture that we're looking at right now, we heard from Fed Chair Powell earlier today. We just heard from Christine Lagarde. You've warned about higher inflation globally that could cause central banks to raise rates perhaps more than thought. After hearing from the central bank leaders today, do you think there is a risk for a higher path for interest rates, and what could that mean for global growth?
I think we're seeing two things when we look at inflation right now. What we're saying is headline inflation has been coming down, mostly on the back of declining inflation for energy and for commodities. But we're seeing stubborn core inflation outside of energy and food. And that is the concern for policymakers, for Chairman Powell or President Lagarde. And so what they're saying really is they're saying, look, we really need to see some good news on this core inflation, these underlying inflation pressures. And it's not quite there yet. We're seeing a few good signs. Chairman Powell mentioned we had two good reads in May and June. That's not enough. So we need to see a consistent pattern. And so the risk there is that if some of these inflation pressures remain elevated, then central banks will have to do more.
And that could cut into growth. Speaking of which, you upgraded your outlook for growth, about a month ago. How are things trending now? What's your outlook for global growth now?
Well, what we're seeing now is a little bit of a divergence in a sense. We upgraded our growth forecast for 2023 by about 0.2 percentage point in July in our latest report. And part of this was the strength of the U.S. economy that has been coming more strongly in the last few reads. And that is confirmed. What we're seeing now is a U.S. economy that is actually quite strong and quite resistant. Strength of the labor market, we see strong consumption, etc. What we are seeing on the other side is we're seeing a weakening of the Chinese economy. We're seeing also potentially some weakening of the European economies. And so that is probably overall going to land us in a growth pattern for 2023 and 2024 that's going to be relatively weak.